Time to focus on the global picture ahead of this opening bell this morning. Jeffrey Kleintop is with us, Chief Global Investment Strategist, Managing Director at Charles Schwab. Thank you so much for being with us. So yesterday's big news was the deal we've made with China. What did you make of it?
You know, this was obviously a very important deal, and it was better than nearly anyone expected, us as well. You know, we thought tariffs would likely come down, but to come all the way down to around 30%, I mean, that's 30% on top of where tariffs were earlier this year. So it's not exactly 30, but the point is better than expected, and certainly is a wave of relief for not just U.S.-China relations and all the trade issues and supply chain issues, but to other countries as well. It sets maybe a ceiling for where rates on other countries may go, as the UK-US deal the week before set maybe a floor at 10%. So it kind of puts everybody in that range of maybe 10 to 30%, or even maybe up as high as 54% if you consider the potential to go back to 54% on China, which is something that the Treasury Secretary talked about. So it puts a boundary around this, and we didn't have that for a while, right? We could tariffs could go anywhere, and now they seem to be within a range, and discussions seem to be progressing. So all of this really taking the tariff risk, the inflation risk, and the economic risk down quite a few notches.
That's good news. Ultimately, I wonder what the Fed thinks of that. I mean, we're not likely to see a cut right now until September, according to the Fed Funds Futures tool. At the same time, we saw the markets jump yesterday. There was a lot of optimism on this. Do we think that this continues? There's no reason to think that this deal doesn't continue in the way that it's meant to continue. I mean, for example, they said they had friendly conversation, speaking at the end of this week. Bessent, that with Trump, they'll speak with Bessent in a couple of weeks, he said. Over the next couple of weeks, he'll speak to them again. So it seems like things are going to go well. And I mean, and that's good news for our American companies, right? I mean, companies like a bit of everything, right?
Yeah, I'm hopeful, Nicole, that this continues to progress. But, you know, I think back to, unfortunately, I'm burdened by this sort of history of the relationship here. And, you know, what we saw back during the first Trump trade war with China is that tariff rates actually increased again after a 90-day reprieve. Back then, on December 2nd, 2018, the U.S. and China agreed to a 90-day reprieve on tariffs. They would lower those tariffs, they would have discussions, and likely they would progress and they would resolve all of this. Well, they didn't, and tariffs jumped after the end of that 90-day period. So there's always a risk they could go back to 54%, with Treasury Secretary Bessent saying 34% reciprocal was a ceiling, plus that added 20%. So there's a risk, certainly, that this unwinds, but it looks like both sides have recognized sort of the folly of the direction they were on, and they're coming together. And where we're seeing the winners here is clearly in aerospace, right? There's a lot of talk about, okay, Boeing able to ship. I know you just talked about that, ship those planes. By the way, we've got potentially a relationship here with Saudi Arabia warming up this week with Trump visiting the Middle East. They're also talking about buying more planes, more defense equipment. So that's been a theme I've had all year. Aerospace and defense as being one of my favorite areas of the market. It's outperformed very well in Europe, but U.S. Planes and defense equipment stocks are doing well also. So that's one of the areas you can focus on here that might be a clear beneficiary here, not just year to date, but over the next 90 days as well.
Yeah, exciting. But I don't love that story that you gave us about 2018, the facts of 2018. I mean, if history is any guide at all, that's terrible. And I haven't really heard much about that. Yeah, so I hope that is not the case, or we don't have a repeat of that. And what stops us from having a repeat of that? What's different this time than that time?
Well, I guess this time the reaction of the markets, the economy, the data was much more severe. Back then, you know, the tariffs were more limited. They weren't as high. And so the impact wasn't as dramatic. There wasn't a market that was demanding some type of resolution, nor were companies as vocal into the U.S. administration as they've been this time around. So I think we've heard a lot more this time. And so Trump was more looking for a win. So was China, which obviously has an economy that hasn't been doing great over the last couple of years. So both of them were in a different position this time in wanting to come together, finding a reason to find a deal. Hopefully that remains over the next 90 days, but there's obviously a risk.
All right. I want to move on, but just so I fully understand, do you feel that China was suffering a little bit? That's you see all this stuff and you don't know what's real and what's not. Was their economy taking a bit of a hit? Were jobs taking a bit of a hit? Banks? I don't know. Real estate's been a problem there for a long time. What exactly, if anything, do you know that China may have experienced that made them want to come to the table?
So there's a few things we can look at. One is the Purchasing Managers Index, which is a survey of private businesses in China, which dropped below the 50 threshold. That's 50 divides expansion versus recession in China. That dipped below 50 in April, so that was a clear sign that things were softening up. We got the trade data for April. It showed a big decline in exports to the U.S., even though overall rising exports from China, a big drop in U.S. exports. So they were feeling the pinch of it. And aside from all of that, we also saw shipping volumes really drop very dramatically. And then a lot of the indicators I like to watch, like air quality within China, which correlates well with manufacturing activity, was slumping as well. So a lot of factors show me that they were feeling the pinch of this, at least in the near term, and did want to find a resolution, given that their domestic economy had been relatively soft because of the property reasons you mentioned, and they've yet to really invoke dramatic stimulus yet this year. So I think they wanted to come to the table as well.
I'm really glad you answered that, because I think those all make a lot of sense. I mean, to have contraction in the PMI instead of expansion, that's a big deal. To see that, the shipping volumes coming down, the air quality, I don't quite get, but okay, I'll leave it there. Let's go on to international investing. We've seen Europe doing better than the U.S. So what do you tell folks when they say, I want to invest internationally? Do you still see some real outperformers in international equities? If so, where?
I do. So to sum all that up, and by the way, air quality has to do with manufacturing activity. It's very dirty in China, so it makes the air dirtier when they're doing more. Air cleans up when they're doing a little less. But as it relates to international,
thank you for that. Yeah,
sure. As it relates to international investing, look, you've got better earnings growth in many parts of the world that we're seeing in the U.S. That's the first time we've seen that in a long time. Gosh, nearly a generation. We've got better economic momentum outside the U.S. Lower valuations are below their 10-year average. A lot of factors coming into play. I think international stocks continue to outperform. One of the areas I haven't talked as much about, I really like Europe. I've talked about different sectors, but I haven't talked about emerging markets a lot. And, they outperformed in the first quarter. They outperformed U.S. stocks by 7 percentage points. And so far in Q2, they're outperforming as well. And this may surprise people that back in the first year of Trump's first term in 2017, emerging market stocks outperformed every single quarter that year, despite all the America First policies and trade risks. And I think we're seeing the same types of things unfold this time around. Broad global economic growth improving in Europe and in Asia, similar to what we saw back in 2017. All this correlating into better growth for emerging market stocks. Again, you can see in this chart here. So, blue and orange is what happened in 2017 with the emerging market stocks outperforming every quarter. And we're seeing a repeat of that again this year. Low valuations, better global growth momentum, all this playing into outperformance. And China's playing a role in this as well, with Chinese stocks up 15% this year.
Right, understood. Let's talk about the dollar back above the 100 mark. It's been sitting around 101 for a couple of days. That feels good, especially when you're going to go to Europe and need to get some euros.
Yeah, I mean, stability in currencies is a good thing, right? It suggests that the markets aren't reacting sharply and assets are moving across borders dramatically. We still think the dollar is headed on a longer term downtrend, although not a sharp or dramatic one. And so some stabilization is great there. I think the dollar is still down maybe 6 or 7% this year versus most of its trading partners. So that's kind of in there, but without seeing a very dramatic or sharp decline, I think is a good thing. A little bit of a bounce yesterday, as you'd expect to see as tariffs came down, but stability there is a good sign. It means there's less of risk to the global financial system.
And ultimately, we think that the deal that we saw with China means more countries will come to the table. I hate to continue to speculate. I mean, until something, it feels like nothing.
Yeah, that's well said, actually. That's a really good sum up of what's going on. So we do know that there are some other countries that are in maybe late stage negotiations. I think Treasury Secretary talked about very productive discussions with Japan, very forthcoming conversations with Indonesia, very good proposal, I think he said, from Taiwan, and South Korea and Thailand are in the works. Europe, however, maybe on the back burner right now. There are some leaders in Europe that have a direct line to the president, but overall, we really haven't seen a lot of progress there. We know U.S. and EU negotiators have started talks last week. They proposed 0 for 0 tariffs, which seem to be a non-starter with the president. But they've also talked about investing more in liquefied natural gas, artificial intelligence, working together on metals and cars and semiconductors and other things that the U.S. administration wants to see. But there's still this issue with services taxes, technology taxes that Europe wants to impose and has imposed in some areas that the U.S. is opposed to. And they're trying to work that out. It's a difficult thing to do, but they've got 90 days. I don't know if it'll be enough.
Yeah, understood. I mean, I believe in the administration. You know, I'm a patriot. I'm all for the president of the United States, whoever that may be. I believe they're doing the right thing and all that. I'm just saying I'm waiting for more details. We got the CPI in today. Anything stand out to you?
Encouraging that it wasn't a blowout number, right? I mean, the market's been very worried about the potential supply chain issues and inflation issues, and the fact that they aren't showing up very dramatically there is good news. The fact that we're not going to now see a flood of cheap products diverted from the U.S. into Europe suggests that inflation in Europe may not be as rapidly decelerating as we may have thought previously. Still see a rate cut from the European Central Bank in early June, but maybe not as aggressive a policy from the central bank in the second half of the year.
Yeah, understood. All right, Jeffrey Kleintop. I mean, I think the global picture is looking pretty good. Any surprises in the geopolitical situation? Anything you're watching there?
I'm watching India and Pakistan. So far things have cooled down a little bit there. Obviously, we'll need to see what develops. There's not a lot of products that come from that part of the world or energy that would affect everything, but certainly that conflict there is something that we've had our eyes on lately, and the fact that that's cooling down, maybe Russia-Ukraine cooling down as well, all those are some good signs.
Yeah, and when it came to defense stocks, I mean, we saw the European defense stocks doing so well. Are those still on your radar? Because you did mention aerospace and defense. Was that here at home and abroad, or more abroad?
Yeah, both. I mean, I certainly like them more abroad, and they're up 43 or 44% this year. They've been our new Mag 7, those 7 defense stocks in Europe. We've been talking about them all year. But the U.S. defense stocks and aerospace stocks are doing well. Also, the S&P 500 Aerospace and Defense Index is up about 15% this year. That's certainly a lot better than the overall index.
Right. All right. It's great to see you. Jeffrey Kleintop of Charles Schwab. Always great to have you on the show and giving us the big picture at home and globally, because that's your specialty. Thank you, Jeff Kleintop, always.